Welcome to TradeTheMBI.com. This is John. This report is for the 7th. And, well, continuation move. See, we started to get the weakness, and I think that we've now produced enough of it here with this steel cross below the cyan that we're probably going to get a little bit of pullback within this. You can also see here vaguely we starting out in red positive extreme. That's an indication that this is probably going to go a little soft and fill back in some of it, but did exactly what we were looking for. We're going to have the 25.89 level here. We were looking for 25.85 range before it starts to push and it begins to pull you up towards eventually getting to the 26. What do we get to 93.50-ish? But oftentimes what happens is you get a little bit of back and forth right at this particular point as you head up to that round number resistance. It's not a significant number, 26, but it's just anytime you get to the full century numbers, it always creates a little hesitation. People like that because they can sell into a set number minus just a fraction. It's a psychological thing. But the NASDAQ certainly was a little bit better, but you can see producing exactly the same configuration. You may even see the cyan move above the red DOC for, and if you get the midterm buyers here in green crossing at the same time, you have a pretty strong confluence that potentially could create an actual short situation. Combine that with the weakness now here that's starting to develop in the euro. We're just about to move back into the top side of my range, right at that 15.5 range, and that's exactly what I was talking about. That would put a little bit more down pressure because being above into that other range was really helping propel things. Still the craze move higher. I mean, it was a buy signal from here on TLT, and it's just been going that it should be this much. Given the situation, no, it shouldn't, but that hasn't stopped anything. And boy, get ready for a nice little beginnings of an inflation spike. This is a pretty clear indication that things are actually moving in the right direction, and that you may actually see significant press in that. Certainly would push inflation much faster than anyone anticipated. Low oil prices are critical to maintaining a low inflation, particularly if you don't have the wage pressures. If that starts to rise in wage pressures, you could have a real serious spiral of inflation. And what that would do to the Fed, particularly with the turmoil the Fed's in, with the number of people resigning, that kind of thing, we could be in for some fun times. And that certainly would justify the multiple that the market is reaching, because with inflation, it's like I said, this was almost a year ago that the market was pre-pricing in inflation down the road, despite what people were seeing with the numbers. And so I don't know why more people can't see these kind of broader macroeconomic ideas, but that's okay. We're getting in, that's all that matters. Pull back in gold here, we ended up with a little dip. It's not a strong buy, but the shakeout's improving. It's just a little dip from the previous day. I think that's going to actually move it towards this. Once we start to get towards positive, then we're going to be looking at this area right up here at the 123 and expect a breakout. And once gold starts to move, then you're really going to know that the back end is really seeing inflation pressures, and that's going to be a nice hedge. There really isn't a world crisis kind of thing that's driving gold at this point. It's just it's going to be an inflation hedge very shortly, and that's going to be critical for it. And it may even become more popular, particularly as the dollar declines. It's traded in dollars. More people will end up buying into that. So you can see here from the 5K, we started out the early futures with a nice little dip. Buy signal came in, and we just escalated all the way straight from it. And right above that 50% line on the Fibonacci. And what we did was we came back to what was the old 50% line right there, just a little bit above it for the dip. And that was enough strength to really move things. And so again, is what you get, that move to the high, and in this case 50% retrace was pretty fast before it turned around, and you get carry through. It just carries through, and in this case it was looking for support right at this other confluence area, and then boom, this bicycle came in. It was slow and steady. I mean, it's pretty jagged if you're like seeing a peak and having it come back. You might be panicking in between those, but when you see it in this context, staying above the key levels and the ABM following it, it's pretty clear. Many end up getting a little overbought here, right in the pre-market. So that's been backfilled already. And the fact that we're getting a steel reset should be interesting. We need to see that orange come back down for a new buy configuration. So all in all, really good readings and really excellent from a configuration standpoint, and just right in line with our expectations. And again, of course, now you get more of the same articles and things about how crazy this all is, yada yada. Just ignore it all and keep focused on what the readings are, and that will take it, because we may be seeing a little point in the daily in that where a little bit of softness is potentially in front of us. So we'll just go as the readings give us and trade well. So we'll talk again later.